It's about empowering people with access to better, more efficient financial solutions. Ladies and gentlemen, a warm welcome to all of you for today's seminar on current trends in fintech and corporate finance. My name is Pooja, a student of MBA Semester 4, and I will be your host for today. Today, we are here to explore fascinating intersection of two vital areas in the world of finance, fintech and corporate finance. Together, fintech and corporate finance are paving the way for a more inclusive, efficient, and sustainable financial ecosystem. Today's seminar aims to delve deeper into the current trends shaping these fields and their impact on businesses and individuals alike. So, without further ado, let's begin our journey into the world of fintech and corporate finance. Get ready for an exciting and informative session. Ladies and gentlemen, we extend a heartfelt welcome to our esteemed guest. Today, we are really delighted to have amongst us Honorable Professor Dr. Lalit Agarwal, sir, Vice President, Mary Group of Institutions. Sir is a distinguished educational in Northern India and has dedicated over 3 decades to the establishment and development of reputable institutions. So, has played a vital role in transforming Mary into a center of excellence in education. Now, I would like to invite Sir to give the welcome address.
Good morning, everybody. Good morning, Dr. Agarwal, Professor Khurana, faculty members, dean, faculty members, and students. It's good to be here in this morning and good to welcome Dr. Agarwal to this institution. Welcome, sir. We are thankful that you have spared your valuable time to be here with us and integrating and your knowledge with the knowledge of the students in a very, very open and collaborative manner. That's what I have been informed. Fintech and corporate finance, students, is a very, very important sector with which we all are affected with and we are concerned with. These days we see that the stock markets are going up. Every second day we see that the Sensex has gone up 700 points or 500 points, it has come down and all this stuff. Now, whether it goes up or down, it depends upon the health of the financial and sector of the company, of the country, as well as the economy of the country. But at the same time, to earn money in the financial sector and specifically in the stock markets is an art which everybody can't do. And with his experience, Dr. Agarwal, who has been MD of Escorts Finance and other important portfolios he has held in his life, I think his interaction with you will be a very, very fruitful and rewarding experience for all of you. And when we talk about the stock markets, you as students will definitely be more cautious as well as more intelligent to be there in that market. Running away from the market is not should not be a choice, which normally I do. So everybody can't do it. But then going into the market with a very, very informed, in a very, very informed manner is an art which you as management students should learn. I should not be speaking much because we are here to listen to Dr. Agarwal. My best wishes to all of you and once again welcome Dr. Agarwal. Let's have a good time together. Thank you.
Thank you, sir, for your words of wisdom. Now, let's move to the most anticipated part of our event, the session by our keynote speaker, Honorable Dr. Ashok Agarwal, sir. Sir is a finance industry professional having a rich experience of more than 27 years with the financial services industry. After completing his master's in economics and MBA, he completed his fellowship from the IIM Ahmedabad in 1991. After completing a long stint at the industry, he has chosen to nurture and mentor young aspiring students in their corporate careers. Sir had been a visiting faculty to several management institutes and in around Delhi NCR while working in the corporate sector. Sir has been an adjunct faculty at IMT Ghaziabad for more than 2 years and currently teaching as a visiting faculty at Shiv Nadar University, Greater Noida. Sir's professional experience is in areas of equity research, derivatives, risk management, portfolio management, investment banking, and fund management. He has been working with the Escorts Group during most part of his working career till 2019 and has managed various assignments during this period. His last assignment was as MD and CEO of Escorts Securities Limited and the CEO of Escorts Asset Management Company Limited, investment managers to Escort Mutual Fund. Sir's area of interest include macroeconomic policies and financial markets, derivatives and risk management, investment banking, financial markets and infrastructure fund management, multidisciplinary decision making in business. So is also a member of Business Excellence Committee of ELCINA, a trade body of electronics component manufacturers and an independent director on the board of Taurus Asset Management Company. Please join me in welcoming Honorable Dr. Ashok Agarwal, sir.
Very good morning to all of you. Thank you, Professor Lalit, Dr. Kurana, distinguished faculty, and dear students. I have been asked to speak on corporate finance and fintech, two emerging areas of. I will not say corporate finance is as old as finance, as long as companies as an organization existed. But I would give you a perspective from a practitioner point of view. Having been in the financial industry for almost about 30 years, and whatever learning I have seen and have had during this period, and the changes in the space. So I'll take you through this very interesting journey today. As I've been watching from the sidelines now last 3-4 years, a very wonderful developments taking place in the post-COVID fintech. Let's explore that together. We live in exciting times. I hope you would all agree with me. And exciting for I'll give you just a brief idea why I call this exciting. India is a poor country. A lot of people may not agree. It's a middle income country or whichever way you look at it. But everybody wants a smartphone. And even when the per capita income is low, we have a second highest smartphone population. 75-year-old company. Any guesses for this? This company is Eicher, and Bullet is the brand. Look at the companies which are traditional businesses. I think we have seen businesses in the brick and mortar space giving rise to saying click, okay, and boom, Uber, Ola, Airbnb, number of these companies, they have challenged the business space of the established players. Now this is just a graphic. We are in terms of smartphones. Here is another company which has no business, no P&L, economic growth is high, unemployment also is very high. Trades are using fingerprints, teaching the illiterates to do the signatures, and cybercrime people are keeping a tab on both the people. It says we'll change the world in a way we haven't imagined. Bitcoin is worth almost $1.2 trillion. Now what is Bitcoin? Software generated crypto, and at the peak, 3 trillion was the crypto's total value. Slightly declined, but 1.2. So much of human suffering in terms of war. But nobody, the word power, are they part of it? And we are just immune to everything. Okay. Aren't these interesting times? Very, very interesting. Okay. Now let's look at something more. Now these are all Indian IT power on display. So many Indians heading the top IT companies in the world. Okay. So one feels proud to be Indian. But are all Indian as lucky as these? A lot of IT guys have not been able to get the jobs. And I'm not, it's just only a description that you have a soft power. How far we can use that, that's important. In 2019, if you had put money in Germany, one euro, you would get less than 1 because interest rates were negative, right? Now, today's situation has got a bit changed, but still Now, you may not have heard the acronym PIGS: Portugal, Islands, Italy, Spain, and Greece. Greece, at one time, at the peak of sovereign debt crisis, the rate was as high as 40%. Government GSEC paper I'm talking about. And in 2021, this was 2012, at 2021 they raised money at negative rates. Okay. That's the exciting time. Portfolio management. Theory teaches us that covariances are negative. One asset class, you diversify across asset classes and portfolio risk goes down. Now you have a situation wherein all asset classes are going together. So covariance is positive. Okay. And you look at this a very freak incident where the real asset price being negative. Only one instance, but nonetheless it has happened. The crude oil price was negative, one future. Okay. Big data noise, social media. The truth and falsehood, the line has got all the more blurred. Okay. These are all exciting things. I just want to take you through the times we live in, the uncertainty, the complexities. Okay. What I need, intend to do in this session, these are cryptos. Okay. I've already spoken about it. Now, for corporate finance in fintech, let me give you a backdrop. What is the backdrop against which we are discussing the issues today? Corporate finance basically, is confined. I mean, I'm looking at from as a practitioner point of view. The entire theory can be summed up in, although you can say organization as a whole is looking at everything is corporate finance. But when we look at corporate finance from a very segmental point of view, it's investment, financing, and how much to pay, retained earnings. That's all it requires. And we'll see that each areas, how the trend has been in the backdrop we are going to discuss. And something about fintechs. What fintechs have done in terms of to create an entirely new business model, innovations, and what areas they could bring I'm not going into the theory or the buzzwords or what it can do, but let's understand what it has done and what it is capable of doing. And I take the entire discussion of corporate finance and fintech to two critical areas of finance. One is risk, and second, the so-called discount rate. Any instrument and asset class, any instrument you look at is you need to, one, have the discounted cash flows. Any instrument. You're valuing a business, you're valuing a company, you're valuing an instrument. Okay. Everything needs a discount rate. And that rate is critically deciding what is the value of that particular instruments. So on these two issues, I'll focus the entire discussion subsequent to our discussion on corporate finance in these areas.